Hi guys, I hope you're doing well. Welcome to the video wherein we are going to talk about a very important concept when we are talking about FAR subject of your CPA exam. A lot of people get confused, a lot of students get confused that what is the difference between revenue and unearned revenue. Now guys, the difference is very simple. Unearned revenue. If you just break down this term into two parts, unearned and revenue. So, what do you mean by unearned? Something which you have not yet earned. And you know what is meant by revenue. So, that revenue which you have not yet earned is your unearned revenue. And we will understand this through a very little example. Suppose this is you, all right? And this is my company, let's say AYS Publishings. Suppose this is my company, AYS Publishings. And what I am into, I publish magazines. And which type of magazines? Please control your mind. I am talking about business magazines over here, all right? So, strictly business magazines. So this is my company, AYS Publishings. I am into magazines. I prepare magazines and people subscribe to that. You wanted to understand more about business and hence you subscribed to my magazines. Let's say on 1st of January year 1. On 1st of January, you paid me $3,000 for 3-year subscription, right? So on 1st of January, you are paying me $3,000 for a 3-year subscription. Now, I have a few questions to ask. Can you tell me on 1st of January year 1, how much will you take into revenue? So if on 1st of January I am receiving some money, I will have to pass a journal entry, right? I hope you remember that. So on 1st of January year 1, how much is my revenue? So some people will say that if I have received 3,000, the entire 3,000 goes to my revenue. No, my dear friends, absolutely wrong. Let me take you back to revenue recognition principle, which says you are going to book your revenue only and only when you have performed your part of obligations. You will book the revenue when you have the right on it, when you have earned it. So on 1st of January, if you receive $3,000 as an advance, isn't it an advance? It is. Have you done any of your obligations yet? No. Why not? Because what is your part of obligation? You have to give the magazine. Have you given any magazine? No, that means you haven't performed your part yet. How can you book it in the revenue then? So revenue here would be zero. You will not book anything. Then you might be having a question in your mind that Ayush, if I am not booking anything, then what will I do of this $3,000? This $3,000, if you would have performed your part of services, this 3,000 would have been your revenue right on spot, right? But you haven't performed yet. So, have you earned this revenue? No. Then what it becomes? Unearned revenue. That revenue which you have not yet earned. So, how much will you take in your unearned revenue account. Entire 3,000. Why entire 3,000? Because as and when I'll perform the obligation, I will transfer the amount to my revenue account. But as of now, I am not booking any revenue. Why? Because I haven't performed any services yet. Let's talk about 31st December year 1. 31st December year 1, when you have sent 12 magazines, one magazine per month, let's say. You have sent 12 magazines. So, my question to you is, how much is the revenue from 1st January to 31st of December in your income statement for this period? What will be your revenue? Now, some people might say, now 3,000 is revenue. No, my dear, not yet. Still, I cannot take 3,000 as my revenue. Why? Because 3,000 was for 3 years, but I have completed only 1 year, right? So, how much will be my revenue? Only $1,000. And what will be the balance of unearned revenue yet? 2,000. How come 2,000? Because you remember when I received the cash, I took everything to unearned revenue. Now, every year, what I am going to do is I am going to transfer the amount from the unearned revenue to my revenue account. Next year, 31st December, year 2, what will be the balance of unearned revenue? Only 1,000 left, right? Because again, 12 months of revenue you will transfer. And this is the concept of unearned revenue, guys. All right. So unearned revenue, yes, you will have to take in your balance sheet. I hope you have understood that by now. Revenue is your income statement account, right? And if you are not taking anything under revenue, of course, you have to take it in the balance sheet. And where in the balance sheet? On your liability side. Why liability side? Because you have to perform your obligations. You have to perform services. You have to send the magazines. And hence, it is an obligation now for you. And since it's an obligation, it has to be your liability. As simple as that. So I hope that made the concept about unearned revenue slightly better in your mind. Now, one question. I can't leave the video without asking a question to you all, right? So, one question, guys. What will be the journal entry? When I transfer the amount from unearned revenue to the revenue, what will be the journal entry? Please give your answers in the comment section below. And if you think this video added even 1% to clarity to your concepts, it was some value addition, please do not forget to hit that like button and please share this video across. I'll wait for your comments.